And all you wonderful money masters and treasure hunters out there, welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for being here, folks. I absolutely love being here, and it is terrific Thursday. Hopefully you're off to a terrific start of your day. If you're not, just change it like that. Change it in a heartbeat, folks. You know you can. It's really all about being happy. You know, happiness, folks, it's not an accident. It is absolutely not an accident. It's something that, it's actually not even something that you wish for. Happiness, folks, is something you design. So today, if you want to be happy, all you've got to do is just design a day of happiness. I know I'm happy to be here with you, folks, and you can always give us a call at 877-927-6648. As I look across my screens, there's green everywhere. How can that be? Well, not really everywhere, but if we take a look at the futures market right now, you've got the Dow futures up maybe about a dozen or so. You've got the ES mini up about 0.75 of a point. You've got I didn't say it was big in green. I just said it was a little green. You got the NASDAQ futures up a couple of points. Russell 2000 up a couple points as well. King dollar up 13 ticks. Gold trading up $17. Silver up 52 cents right now out at 27.71. We're going to certainly take a look at the metals. You got light sweet crude trading up 80 cents. You've got the DAX. If we take a quick spin over in Europe to see what the markets are doing across the world, the DAX trading off 35 points right now. FTSE down 56 points. But over in Asia, they had an okay night. You had the Nikkei up 75 points. The Hang Seng was down 58 points. So those two just kind of canceled themselves out almost. And you had the Shanghai up 34. Of course, over in Italy right now, their market is down 73 points. 877-927-6648. So, when we left yesterday, as we were getting off the show, or maybe towards the end of the show, I'm going to go ahead and put those charts up on the screen. We're taking a look at the 10-minute ETFs. And that was when I say yesterday, I'm talking about doing the Money Masters show. So during the Money Masters show, what we were taking a look at here, folks, and you can always watch us on TigerTV, or you can catch the archive of this show on Channel 9. So if you're listening on the radio, thank you so much for doing that. We absolutely appreciate that. And you can go, when you get to maybe this afternoon, you'll be able to pick up the archive of this show here. And what you'll see when we take a look at that 10-minute chart, what we were showing price was moving up. Now, when I talk about price moving up, we were looking at the lows that were put in maybe at about 3:20 in the afternoon on the 15th. Today's the 17th, right? So 2 days ago. And what we were watching price move up, and we were watching volume move down. Now, that's the IWM that we were looking at. I said, folks, that's not real. And sure enough, shortly after that, the market continued to just simply slide down. If we take a look at it on really all of the ETFs, let's look at the diamonds. The diamonds doing the same thing, where you had price moving up, you had volume moving down. Didn't make sense. You knew that wasn't real. Those are things that you want to be able to look for. You don't even need to really understand technical analysis. All you have to understand is really just supply and demand. And when you see something like that, you can say to yourself, that's a divergence that absolutely doesn't make sense. It's going to resolve itself one way or another. Usually it's going to resolve itself in the way of volume. Of course, as the market started going down here, if you take a look at the SPYs on the 10-minute chart, what did you see? You saw volume picking up to the downside. That makes sense. Where price is going and where volume is going is telling you where real supply and demand is. Talk about supply and demand, folks. Let's start off with the King Dollar himself. We take a look at King Dollar. You can see King Dollar here yesterday completing an A to B equals C to D pattern. That A to B equals C to D, folks, is at 81.71. You're trading at 81.67 right now. Now, you had huge volume yesterday. I mean, as you came in to that D point, and folks, if you really want to be able to understand A, B, C, D, if you're trying to figure out a pattern, or you want to start to understand technical trading, or you'd like to know where your stocks are, at all different times. Doesn't matter whether you're trading daily, weekly, monthly. Doesn't matter whether you're trading currencies, whether you're trading stocks, whether you're trading ETFs, whatever it is that you're trading or investing. You want to be able to understand what the patterns are, because you don't want to ride things on the way down if you're long, and you certainly don't want to ride things on the way up if you're short. And you want to understand these breathing patterns. They happen everywhere. It doesn't matter what you throw at me. You give me a call at 877-927-6648. You give me the symbol to look at. We'll go take a look at it, and we'll find the A to B equals CD pattern out there. And folks, tomorrow, it's already tomorrow. Tomorrow I'm going to teach quite a few folks, and you can join them, how to become the master of that C to D leg and how to buy and sell the D point, folks. I am so excited to be able to do that. I probably won't get much sleep, not because I'm not prepared, just simply because of the excitement and the passion and the ability to be able to teach someone, not just someone, quite a few folks about these markets, about patterns that they can see, about being able to let the market come to them and just simply do a quick interpretation of when to buy and sell that D point. In this case here, you did have volume coming into the D point at the 81.71 level. Yesterday, you got up to 81.75. How's that for understanding your A to B equals CD? The move may not be over. In fact, right now, you're still inside the swing point out here. In fact, there's no signal yet inside the U.S. dollar index that the move to the upside is over. It still can easily go tag 82.04, where it would complete a 100% move of a move. And, so whether it's going to do that or whether it's going to pull back here, we'll find out, and what's that all about? Well, we know it's really all about the currencies. It's all about the euro. Now, if 82.04 gives way, the next move up in the dollar index is going to be in the 83 area. That's really its next set of swing points, which take you back to August 24th, 25th, 2010. Why is that important? In fact, what we probably should do, we'll do it later, is the same thing that we're going to do when we go take a look at the euro, because you want to see, this is harmony, folks. We're seeing absolute harmony in the markets. The markets are orderly. You just want to make sure that you understand what the current patterns are that are in place. So if we go take a look at the euro U.S. dollar, what we'll see is the euro U.S. dollar right now making a 100% move of a move. See, just like the dollar index did. And so in this case here, the euro making a 100% move of a move, getting down into the swing point from January 16th, 2012. It has rejected that area as we speak right now. The day is long. The euro is not strong. And so we'll see how that is going to work out. Now, let me see here if I have the weekly chart up of the euro. And if not, we'll go ahead and put that weekly chart up. Okay, I don't see it. So let's see if I'm going to go ahead and maybe I will be fortunate. And when I switch over here to the weekly chart, my lines will already be in there. But if not, we'll be able to draw. There we go. So now what we're taking a look at here is the weekly chart. Now remember, I said if the U.S. dollar index doesn't hold, if it does more than the 100% move of a move, it'll move up to the next area. That next area being, folks, the August 24th area. Well, now what we're taking a look at here on the weekly chart, what we are looking at, folks, is we're looking at the euro trading inside that week of August 27, 2010. Really important week. Now, if you didn't have astro cycles as part of your toolbox, you would have no idea about the power behind that week of August 27, 2010. You might just take a look at it as being a normal swing point. Folks, it is anything but normal. If you go take a look at our U.S. markets, which we'll do, we'll see that from August 24th through the highs in May 2011, the market never stopped. You had two back-to-back P index dates, a 3P index date and a 15P index date. And when you've got them back to back, that's going to tell you that you're going to make some type of significant top or bottom. In the case of the euro, made a relatively significant bottom. Went ahead and completed an A to B equals CD pattern. If we draw that in here, which is easy to do because it works on weekly charts, it works on daily charts, it works on monthly charts. Just look at the A to B equals CD that it did. The 1-to-1 was right up here in the 140 area, got up a little bit higher. What does it do? It moves back. It moves back in this case here. It does a normal retracement. I'll bet you if we go take a look at our retracement from low to high, we're going to see one of our numbers or close to one of our numbers pop up. And when it was coming back there, when it was pulling back into that area, folks, it was doing that on January 14, 2011. And where it was pulling back into, where was that August area? Never was able to get all the way down there. Now, the most recent time that the euro got into that area was in January 2012. It's inside there right now. Why is it so important? Well, in my opinion, and this one is my opinion, folks, in my opinion, if the August 27, 2010, the price point of 1.25861 gets taken out, even though that set of P index dates was way back in 2010, that, folks, is going to tell you you've got some significant prices to the downside coming in the euro. And as far as the king is concerned, it is absolutely going to the moon. Apparently, the space shuttle program will be back in service. But we'll see how this area here gets handled. I would expect that we're at areas, and we're coming into tomorrow. And this is what I need to find out. I don't have my ephemeris with me. Whether the actual when the P index date, the actual P index date is tomorrow, Friday. It's a 2 planetary index date. We're talking about a weekend, a couple of 5 days with a heck of a lot of things going on inside the universe, folks. You've got a new moon coming in. You've got an apogee where the moon is furthest from us. The new moon is a solar new moon. You've got what else do you? Oh, and on Tuesday, we've got a 3 planetary index date. So we got the fireworks around here, and this is the place to stay in order to find out what is happening. If we take a quick look at earnings out there before we go to break, leading the way up at 12% is Kong Zong Corp, K-O-N-G. King Kong is alive. Last traded out at $6.65. I don't know what they do. They must do something with King Kong. And they last traded last night at $5.92. You got dry ships up about 3% after earnings. Walmart up about 3.5%. Jack in the Box up 3.4%. Steinmart up 4%. Sears Holdings up 7%. NetEase up 7%. On the downside, what do we have? 10% down, Red Robin Gourmet and Advanced Auto Parts. 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of tfnn.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And the first index, actually the futures contract to the October 27th swing point is the small caps. Happened this morning at around 7:40, 7:50. And the swing point that we're taking a look at, folks, the high there on the Russell 2000 futures is 768.40. It's trading out right now at 771.80 or so, and it is got down to a low this morning of 765 even Steven. This is something we're going to want to watch, because if this area here is rejected, that'll be an important piece of information about the markets. You close inside there, and then the piece of information is, let's go take a look at some of the other indexes and see what they're doing. But before we do that, let's go to our man Jim in Tampa. Jim, thanks for calling. Thanks for holding.
Hi, Steve. How are you?
I'm doing great. Yourself today?
Good. Yeah, I wanted to ask you about the SPYs, if that's okay.
Absolutely. You can ask me about anything you want.
Okay, thanks. I was looking at the chart, and I was wondering if this looks like a 3 drive to a bottom, if it's possible, if that's possible.
Sure. Well, anything is possible. And let's go pull up the chart. You're looking at the daily chart?
Oh, I'm looking at a 10-minute chart.
10-minute chart. Okay, that's great. Okay,
right.
So let me go find the 10-minute chart here. Okay, ETFs, 10-minute chart, and so let me just erase everything. And so tell me what you're looking at, what's coming off of the 10/20 time frame on May 14th. Is that your first area?
I was actually looking at May 11th at, 11:30.
May 11th.
Would be the top. So I'm not sure how to label this. 10/20 on May 14th, that would be the first wave down, and then there would be the second wave down would be the 15th on May 15th at 3 o'clock, and then yesterday at the close would be the third drive.
Yeah, so I would be, if I were going to, let's just go ahead and let me get my 3 drive tool out of the shed here. So I'm going to start actually at the swing point at 10:20 a.m. The low there that I'm looking at is 133.91. So I'm going to use that. Then I'm going to go all the way up to the high that came in at 2 p.m. on May the 14th. That's going to be, and then my second drive, if you will, down as I draw this pattern, and you pointed it out. May 15th,
right.
Low of 133.13 came in at 230, and then if I use yesterday's swing point low, it's now let's measure it based on time. Let's see how close that is to time here. And I've got a little tool that allows us to do that real quickly, because you don't want to force it. So the time is a little bit early, and I would say that the better price, let me spend a moment here, and I'm going to actually draw in the price projection of what that would look like. Let's see here. What's the best way to do this? The best way to do this is start with that swing point again. Are you watching on TigerTV?
Yeah, I'm watching it right now.
Okay, good. Okay. So let's see what we have here. Looks like about right there. So about like so. Now, what you'd like to see here, that way you really have kind of this straight line. If you were looking for extraordinary, outstanding, what you like to really see is a couple of things. Number one, you want to be able to see a Fibonacci expansion of maybe 1.272 or 1.618. In this case here, you've got about your 1.618 expansion between your swing points here from the low of that 133.92 that came into the low of 133.17. But you should get maybe a little bit, around 132.40 it looks like would be. Now let's take a look at what that expansion. It says it's about 1.5. I want to see just how far off. You are. It is really right in there. But now what you also need, as you've got a 3 drive to a bottom on it, I don't really, on the 10-minute chart, so let's take a look at it on the 10-minute chart. Let's go see what it's going up against. I'd have to go back pretty far. Let me go pull up the daily here, okay? Because what you also, as you're making a 3 drive, what you also want to be doing, I don't know how I pulled up the XLF. What you also want to be doing is you want to have it coming into like a retracement area, maybe 0.382, 618, or 786 area on the longer term chart. It just simply has more meaning if you do that. And what you do have though is you are completing an A to B equals CD down at that in that range. But stay with us. We'll go pull this apart if you'd like. Can you stick with me?
Yeah, that would be great.
Okay.
Yeah, thanks. Yeah.
All right. Folks, we'll be right back. We'll go see how these markets are going to open. Then we're going back to Jim, take a look at that possible 3 drive through bottom pattern. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. And let's hope that this is not the Preakness, folks, because they're really not out of the gate yet. You got the Dow off 1 point. S&P's totally flat. Composite up 1 point. Russell not even up a full point. We're talking about a flat market here. Popping to the upside, though. Stock-wise, you got Google up $8. NetEase up almost $5. Sears holding up $3.75. Walmart up $2.30. Herbalife $1.62. Salesforce Innovation, CRM, don't go near that, folks. That's up $2. Agilent Technologies up $1.53. You got Media General, MEG. I think Buffett is bought those guys or something, up $1.39, maybe something like that. You got C-Trip, CTRP, they're up $1.37. Canadian Pacific up about $1.38. To the downside, Advanced Auto Parts off 12%, down $10. Dollar Tree trading down 4% off $4. O'Reilly Automotive down $4. That's 4%. Panel, PANL, Universal Display getting hammered again this morning. They are down about 8%, down another $2.70. 21 Vianet. VNET, they're down 14% this morning. Martin Marietta, MLM, they are down 2.5%. GameStop off 7.6%. Apple trading down, well, Apple's flat, trading off $2. Dollar General, DG, off 2.5%. Cintas Corp, CTAS, off 3%. Royal Dutch Petroleum Corporation, they are down, well, they were there, let's see, they're down about 1.6%. And Caterpillar off $1.20. Let's go back to Jim in Tampa. Jim, let me, if it's okay with you, let me show you, really an ideal 3-drive to a bottom pattern. Would that be okay?
Sure, that'd be great. Thank you.
Yeah, okay. So we're going to go, folks, we're going to go take a look at the ticker symbol is KOG, not Kong. We're not going to go take a look at King Kong. We're going to go take a look at Kodiak Oil and Gas. And this is something that, wouldn't be bad for you to, if you do have charts, and you want to understand what a 3-drive to a bottom really looks like. And it's going to have more meaning. It has meaning on any chart. But certainly let's just take a look at what really is an ideal one here. And on Kodiak Oil and Gas, what we're going to look at now, number one, visually it should be pleasing to the eyes, just as it was on the SPYs on the 10-minute chart for Jim. But let's take a look at Kodiak Oil and Gas. And the first drive down happens to be the swing point into the June 23rd, 2011, when it got down to $4.90. Now, the tool that I use, Jim, I start my drawing from that actual swing point low. Yes, it made the first drive down from the highs of June 1st when it was up at 686 down to that low. Now, when it made a move down to that low, it happened to borrow one of my candles, my hammer candles. On June 23rd, you had confirmation with price higher. The stock went ahead, moved up, did a 100% move, just as you would expect. Just all textbook stuff. So that's our first drive down there. So I'm going to start with the low of 490. Then it makes a bounce up to August 1st. The second drive down is going to be really that candle in August 8th. When it makes another hammer and it gets down to 437. And then your third drive is when it gets all the way down to October 5th. And what you've got is really nice sacred geometry along the expansions as it's making its three drives. You got a 1.272, even though it says 1.33, close enough to 1.272, and the overall expansion between the three swing points is 1.618. And what's nice is when you are making these, or when not you, but when the market is making these, what you want to be able to see it doing is a couple of things if it can. This one here is just textbook. That's why I went ahead and brought it up. And that is, as it's making its third drive down, it makes it with another hammer candle. So as you're making your drive down there, it's giving you some indication that should be an area where it would turn around. Okay, so making a three drive with either a bullish engulfing or a hammer candle, single candle formation is real nice. The other thing that you want it to do is you want to see it coming in near some other retracement level. Well, so if we pull this chart back further and we go take a look at the lows off of September 1st, when it was in the $2.50 area, and we take our retracement tool, if we go from the lows down there and all the way up to the highs that were put in, and the highs that were put in here, would be March 1st, 2011. What you'll notice is that the 0.786, can you see this? I don't know if you can see it large enough on TigerTV, but the 0.786 of that move comes in at $3.62. Kodiak gas on that third drive to the bottom gets to $3.59. How does that work?
I don't know. It's amazing, isn't it?
It is. And then, folks, when you have that information, what you really also had going was you had a Gartley buy. So I'll just simply draw that in. So you had a three drive to a bottom pattern, and you had a Gartley buy pattern that came in at the same price. So it had everything. So let's go switch back over to the SPY and take a look at that ETF on the 10-minute. And what you can see with the SPY, it's getting closer to the area that I drew from a better expansion, having just simply these straight lines along the bottom. That's what I like to see. The problem here with the SPY on the 10-minute chart, let me just switch over to maybe a 30-minute chart. It will be a little bit easier for me to probably see what we're retracing back to. So if you would take a look at what we're retracing back to, you'd probably have to go all the way down to the swing point low on December 19th. And if we just simply do the retracement off of that low up to the high that came in on, April, somewhere in April 26th or so, April 2nd, it's completing below the 0.382 area. In fact, even on the 30-minute chart, you could sort of draw that three drive to a bottom pattern. Now, the key here is if this is a valid three drive to a bottom pattern. So there, I just drew it in on the 30-minute chart for you. What you don't have right now is you do not have any kind of reversal candle signal. So you don't have a Gartley buy. You're not up against you're kind of like mid-stroke in between some retracement areas because you're in between the 0.382 and the 618, and so you don't have anything just yet. But really great visualization and spotting of what may be a three drive to a bottom pattern. It's just not the ideal one that I would have you be looking for.
Okay, yeah. Well, thanks for all the information. That really helps me out.
Yeah, no problem. Any other questions that I can clear up?
No, but that helped me a lot. Thank you.
Okay, you bet. So go back, take a look at Kodiak Oil and Gas, KOG. That is that's really that use that one for your textbook references of what it is that you're looking for. Alrighty? And if you don't have that chart, send me an email, steve@tfnn.com. I'll be happy to send that to you.
All right, thanks a lot.
You bet. All right, folks, let's keep looking at the markets out here right now. You got the Dow off 30, S&P's now off 3. They're out of the gate. And you got the composite down 5, Russell down a couple of points, DAX off 50 points right now, and the FTSE off 63 points. King Dollar up 18 ticks. So let's go see what it is that we have going on around the world. Let's go look for some signals. Well, let's look for a little divergence, right? Isn't it nice to find maybe a little divergence out there in the marketplace? That divergence, folks, is right here in the gold contract. Let's go ahead and pull it up here. And this is something you're going to want to keep your eye on today. So what did gold do yesterday? Gold came down and tested the swing point low, which had 5 volume. We're looking at the gold contract right now. Came down the September 26, 2011 area. That low out there was 1535 even. You also had a low. You had that area was tested on December 29th when it got down to 1523. And yesterday you get down to a low of 1526.70. Yesterday you do it with about 159,000 contracts at 159 going against 114, but it was really all going against the support of 359,000 contracts on September 26. You rejected that price or rejected that swing point low, when it closed out the contract yesterday. And so far today, if you get a close, folks, above yesterday's open, 1544.90, you will have a bullish engulfing candle. That won't give you the whole clue. You're going to have to wait to see how tomorrow trades, but that would give you a bullish engulfing candle as you have. So here's some divergence out here. You'd have a bullish engulfing candle as you've tested and rejected a high volume swing point. So that is a potential short-term positive. If you're looking at my screen, you are taking a look at the 50-day. Let me just go ahead and put the actual results up there. What you also have is you're looking at the 50-day. You're looking at the death cross. You're looking at the real death cross. That's the 50-day exponential moving average crossing through the 200-day exponential moving average. Did that a couple days ago. So what you've got here is you've got gold on a long-term sell signal. So what we're looking at here is and then somebody can say, well, how can that be, Steve? How can you say, hey, wait, you've just tested a swing point low with light volume. So far rejected it. Maybe you're going to have a bullish engulfing today, and maybe you're going to get confirmation tomorrow, and yet you're telling me in the long term that gold is going south. Well, the charts are telling you that they're going south, and you can have a short-term bounce, can't you? You can have a short term. You can have what's called a bull rally, right, and or bear market rally. And so in that case, that's really what gold would be setting up. It would just simply be setting because the long term with that death cross until the 50-day moves back over the 200. And that's going to take some work on gold's part. Long term, gold is heading lower. It's heading towards that $1,100 mark. That I gave to you. But it's got some work to do to the downside. Now, you don't create a bullish engulfing today, and that would mean, folks, that you're going to close today below 1544.90. Then all it's doing is just continuing to chip away at that bottom, and it wants lower price sooner than later. So when you take a look at it, you can have signs that take a look at short-term bounces, because things don't always go up and things don't always go down. And that's really what you're getting here from a signal standpoint. You're getting long-term sell signal. You're getting potentially short-term bounce. And in the intermediate term, I would say you're just kind of in the middle of the road. You got really the same thing going on in silver. Now, silver did not get all the way down and test out its hammer candle, one beautiful hammer candle, going back to September 26 as well. That low out there, 26.15. Now, I'm going to go back to gold here real quickly because you're not going to be out of the woodshed, and make sure that people don't ever really misuse the information that don't go out and buy the GLD right now, just because there's the potential for a bullish engulfing. You really need to understand those candles, how they work, and what you're looking for. And that's one of the things that I'll be working on with the folks attending the workshop tomorrow. And it's still not too late to get in, folks. All the details are on the homepage at tfnn.com. But you're really not going to be out of the woodshed, and I'll call it a confirmed possible bounce until you get back up, in my opinion, over this December 29th swing point. That means you got to see gold close above 1562.80. So to really set up the possible trade, folks, you want to see today a bullish engulfing, and you want to see tomorrow a close above 1582.80, and then then you really have to make sure you've got the right money management in place. And if we take a look at silver, you have a similar type setup on silver, meaning that today, just simply because of the candle that it has formed, if you get a close in silver above 27.61, you also will set up a bullish engulfing candle, and you would need tomorrow for silver to close above the swing point low out here, the most recent one, December 29th. That is $27.84. You're trading out at $27.55 right now, and the king wants to just simply say no. King wants to put the kibosh on that all the way. King now trading up, at that 81.71 level, that move, that A to B equals C to D, and as long as it's inside this swing point, it would really make sense for you to understand both from a bullish and bearish standpoint, have it test the top of that area. Top of that being 8204. You only have 21,000 contracts up there. Today so far, you have done 18,500 contracts. So still have a juice in King dollar, and that means people want out of the euro. If we go take a look around the world in 60 days, or 60 minutes, or 60 seconds, it looks like. What you've got here is you've got the DAX. The DAX trading below October 28th. You know, our swing point is October 27th, and trading out right now at 63.28. The DAX wanting to first get down to 61.79, but really it's on its way down to the 5900 area. The actual number, I think it's, as the target is going to be 59.87 as its next move down. Let's go take a look at what else is going on around the world. Let's look at the FTSE first. So we're going to keep over in Europe since we got those markets are open. And the FTSE trying to make a 1 to 1.272 A to B equals CD. For my work, it actually completed that today as it came back into the December 20th swing point. We can see that so far the FTSE has rejected price at that swing point. I wish I had volume for you. What you're going to want to see here is if the FTSE closes below today, 53.28.67. You're at 53.41 right now. At 11:30, you'll know what the close is. Then the FTSE wants to go make a 100% move and get all the way back to November 25th. That is where our markets are going to be headed as well, folks. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Dow off about 31 points right now. S&P's off 4. Composite down 12. Russell 2000 down 4.5 points. Had a request from a caller who had to go back to work and to take a look at BP, British Petroleum, and right now trading out at 37.85. I do have the weekly chart on the screen. I don't know whether the caller was looking to go long or is short. So I'll just simply give you my take on this. Right now, what it's doing, it's trading inside the high volume, almost swing point, close enough, on June 11, 2010. So trading inside there, is not a good thing. You don't ever want to see a stock trade inside a high volume area because once you're inside, well, depends on whether you're long or short. So let's just say this. It's trading inside there. The high of that candle is 38.15. The low is $29. You're trading at 37.88 unless you get a rejection, meaning on a weekly basis, meaning tomorrow, a close above 38.15. That sets up the possibility to go down and test $29. Now, what can stop it is the most recent swing point, which was from October 7, 2011. Makes sense, right? October 4th. And you take a look at that. You're looking at the swing point high of 37.49 and the low of 33.62. So you are very close to that swing point. You get inside there. Now, that's got 59 million shares. You don't have the juice this week yet, with it being Thursday through yesterday. You had a total of only 16 million shares. So, what you would ideally, if you're in this trade, you'd like to see it get down. Test, here, the ultimate would be get down to 37.48, close back above 38.15, and do it all on less than 59 million shares. So that is on BP. Let's go take a look at Sears Holdings. Sears Holding, the leader in the clubhouse from a dollar standpoint, SHLD. They are trading out at 54.47, although they're giving back most of their gains from their pop this morning. So Sears Holdings, what did they release here? What did they do? Let's see. They had Sears Canada announces possible partial spinoff by Sears Holdings. Was that all that there was? Let's see here. You got Q1 revenues down to $9.3 billion from $9.54 billion. So it must be the sell-off of the real estate. Their Q1 adjusted loss from continued operations, 33 versus 144 million. What else do we have out here? That's all that I show here. So Sears Holdings, let's go take a look at it. You did have a slight breakout on May Day, May the 1st, when it popped up with 4.8 million shares. So you had decent volume there. You came back and you tested that breakout area. Not a huge breakout because you were really, the session before, you were up at the 54.60 area. But you came back. That had volume there of 1 million shares. You came back into Sears Holdings yesterday with 1.2 million shares. So coming back into that breakout area with too much volume. The swing point actually that it was traded into actually had 1.5 million shares. But Sears popping and dropping this morning, and nothing really too impressive out here when we take a look at Sears Holdings. Let's go take a Precision Cast Parts, PCP. They're up about 3% in the market right now. Ticker symbol PCP. Let's see how they're performing this morning. And so they are trading up nicely out at $170.33. Let's go see what is, that wasn't very good. Let's go see what is possibly causing that pop here. Let's see, they had earnings per share $8.41 versus $7.04. Net sales $7.2 versus $6.2 billion, and their net income not to be found on my screen. Folks, thanks so much for being here. Time just simply flies too fast. Stay tuned for the Money Masters show. Happiness, folks. It's all about designing it. Go design some happiness today, folks. Take care. I'll be back in just a few. Bye-bye.